welcome to today's Market Snapshot. My name's Craig Erlam, Senior Market Analyst at OANDA. Now, firstly, today we'll take a look at how the markets are moving today, and we have seen some volatility so far in the markets, but really many of them are actually just treading water at this stage. Any moves that we saw following the Asian session overnight and early into the European session, many of them have reversed. The one place where we are seeing some significant moves, even though they have paired their moves as well, is in the oil markets. Now, of course, overnight we had the news from Kuwait that the strike, which had led to 1.5 million barrels a day going offline, has been resolved, and the workers are going to return to their normal jobs today, and they're hoping to ramp up production again by Friday. So that has resolved the potential supply issue in Kuwait. Of course, there are still some other supply disruptions as well in Venezuela, Nigeria, and a couple of other countries as well. But I think this was the main issue that people were really focused on when oil continued to rally following the initial sell-off after the Doha meeting at the start of the week. But in other markets, we were seeing some moves earlier on. We saw some moves in the yen, which did actually start to regain pressure overnight. We started to see the yen rally slightly, having fallen yesterday. The Nikkei, as a result, reversing its gains overnight to end the session only slightly in the positive. Now, we have seen this reverse once again today to trade pretty flat, the yen now on the day. We're seeing in the pound, we saw some strong rallies in the pound yesterday. We've seen some volatility this morning, a couple of things not going its way. We saw another Brexit poll come out and showed it much more even than yesterday's poll from the ORB, which I think really inspired that rally in the pound yesterday. We've had the UK jobs report this morning, which again it was a bit of a mixed report overall. I think the overall headline wasn't too great. We saw the claimant count rise, which was a surprise, and we also saw average earnings including bonuses at 1.8%, much lower than we were expecting. The upside here was that average earnings excluding bonuses, which I think is a better sample for the overall economy, was at 2.2%, which is in line with expectations and unchanged. And the unemployment rate remained at 5.1%. Again, we're seeing a lot of full-time employment still, and private sector employment as well. So I think it's a bit of a mixed jobs report, but we did see some volatility off the back of that. We saw an initial sell-off in the pound, but that has since recovered. And again, as we've already mentioned, that's trading pretty flat on the day at this stage. Now, if we take a look at the economic calendar now for today, as you can see, like I've said, we've touched on the UK jobs report, which was relatively mixed. We've heard from Mario Draghi this morning ahead of tomorrow's ECB meeting. Again, the ECB meeting is going to be quite key. We're not expecting any change, of course, from the ECB meeting itself, but at the same time, the press conference does tend to generate a lot of market volatility. People will be looking to find out what the ECB plans to do next if inflation remains low, and what it anticipates for the coming months. We've also got some data from the US as well. We're going to hear from Bank of Canada Governor Powell as well this afternoon. But like I say, that I think the US data now is going to be key. We've got new existing home sales to come, but I think the other one again is going to be that crude oil inventories figure that we've got later on this afternoon. Of course, like I say, oil continuing is falling slightly today, but not too dramatically. It'll be interesting to see what we get from this figure. The API figure yesterday showed another build of 3.1 million. We're expecting around 2.4 million today, so roughly in line. But again, if we see any shortfall here, or if we see an actual drawdown in the oil inventories, then it wouldn't be surprised if we see sort of a bit of upside momentum being gained in oil. We're not really seeing the kind of downside momentum in oil today that you might otherwise have expected, given the fact that the strike in Kuwait has come to an end, and that was largely attributed to the rally off of Monday's lows. We're down around 1.5% on the day, but we were down around 2.5 to 3% earlier in the session. I think these crude inventory data is going to be extremely key now for those oil markets, and may give us a better idea of how it's going to trade into the end of the week. For more in-depth news and analysis, check out OANDA MarketPulse at MarketPulse.com. You can also find out more about OANDA and sign up for a free demo account at OANDA.com. Here you'll also get access to OANDA Forex Labs, which has a lot of great tools designed to help you with your trading.